Yeah, man, I feel like ideas come. I get a lot of ideas. Like I like cheap stocks. Like if something has a low multiple, I want to look at it. Or if there's a change that hasn't shown up in the valuation yet, like a corporate change, that's something I want to take a look at. So what I do, my investment process is the most important names are the names I own, right? Like that, those are the biggest problems that I'm gonna have because I already own them. I have a stake, and so I I every Tuesday afternoon, I go through my portfolio and I kind of grade the portfolio about what's my upside, downside, how's the business performing, how have my last few conversations with management gone, and I assign letter grades to the entire portfolio. And then in that process, I do this in a spreadsheet, and I keep track of my idea list. So I have two lists. I have a list that I've done work on that I feel comfortable I can buy the stock. Like I've talked to management, I know the thesis. Like I just am waiting for either a new catalyst, a new story, or something, a stock price, the right stock price to buy it. Like they don't quite get into the portfolio yet, but and that list is like I think right now it's 11 names, and then I have a list. It's about 15 or 20 names of names that I'm working on. It's a watch list, and some of the names have been on there for quarters. Some got on last week. Names can go on and off the watch list pretty quickly because like I'll come up with an idea or somebody will pitch an idea to me, it goes on the watch list and I'll start reading. And then if I quickly cycle out of some of those names because they don't meet whatever criteria. So, I feel like I'm pretty open to thinking about new names and so that those ideas potentially get on the watch list pretty easily. And so I guess one change that I've made, like to answer um, your earlier question in a different way, was I used to run a much more concentrated portfolio. I used to own 22 or 24 names. And the last few years, I've been running 40, 45 names. And part of that is because I historically did not own very small banks because they were expensive. And, in the last few years in COVID and Silicon Valley, the small banks have gotten cheap. So I own more small banks than I did 10 years ago. And so the small banks, you know, they trade, but they trade 30,000 shares a day. And so to own a 4 or 5% position in a bank that only trades 30,000 shares a day would take a little bit of time to buy it. So instead of buying those size positions, I own maybe, 50 or 100 or 150 basis points in some of these small banks. So that's increased my number of positions. At the same time, I've increased my number of positions, my performance has improved. So I don't know if there's a correlation there or it's coincidental, but I've become more comfortable owning more names. And I don't think I need to own a small number of names to have good performance because all my names kind of overlap. Like small banks, it's the same trade, right? It's just more
Yeah.
names. Like it's either small banks are going to work or they're not going to work. And so I don't feel like my largest investor hammers me constantly about you own too many names. I don't want to own the index. I'm like, oh, my portfolio is not really the index. Like it's not diversified. I'm in one sector. So I've just been more comfortable owning more names recently, and that's a change but the idea generation, I feel like that's the fun part of investing, like looking at names, waking up on Saturday morning when the phone's not going to ring and spending 5 hours just doing
That's
research.
what I like to do.
That's awesome. That's why we do the job is to do the research on the names. And